Moon gang. Hello. Welcome to the afternoon session. We got lots to talk about. I'm not gonna lie. Day one of this, I kind of like it because it gives me time to study and research and then put together a game plan of like what we can learn in the different sessions. I kind of like it. So anyway, obviously we have a lot of things to go over and let's hop right into it. AMC trading at 33.40, looking for a little bit of a technical breakout by this yellow line I have. GME trading at 171.02. Explosion this morning and holding very, very strong. GME showing some strength on its intraday chart. IWM and SPY, the overall markets, a little bit of weakness. And this is actually the first thing I want to talk about. I think this is important. No matter, man, the mental aptitude of these bots and shills and all of that stuff blows my mind. So let's start with thing one, margin call right here. I retweeted it. This is from FX Hedgers. Margin calls go out at 2 p.m. Eastern today. So, I mean, if you want to see some top tier stupidity, you could read some of these comments. Most make sense, but some of them especially. You don't get margin called for a specific stock unless you only hold one stock in your account. Your account is getting margin called by a broker. They don't say, oh, this position's out of hand, that position. They look at your account. How much risk is your account presenting to the broker? So right here, margin call goes out at 2 p.m. today. First of all, the question is, did I fact check it? Yes, of course. I actually called up. So for example, I called up a couple of my brokerages. Let's just say TradeStation, for example. I was like, hey, what's going on with your margin requirements? They're like, we already updated them at noon. So is it all margin calls at 2? No, I mean, not every brokerage follows the same set of rules. So I called up TradeStation. They're like, oh, ours is at 2. And then I called E-Trade, TD. They're all increasing their margin requirements as in less leeway. So for example, if let's just say for the ease of math, like, I don't know, let's say there's like $100 position out there. Well, sometimes margin's just 20. So like you just have to have $20 in your account and they think you're not going to go below zero. Sometimes it's 40, sometimes it's 50. So when I called, this is the one I just got off the phone with, TradeStation, theirs is at 100%. So whatever the position is, they increased their margin requirement. So any account, like let's say you had that $20 position, something representing $100, as in you got 80% margin there, like just in this example. Well, let's say your account wasn't over 100. Well, that would go into margin call. So right here, accounts that were close to being margin called are now in more danger, less leeway, as in the brokerage isn't going to loan them more money for their current position. That's all it is. This isn't guaranteeing margin calls whatsoever, and it's in no way specific to AMC or GME. It's market wide. Because of the volatility we're seeing in the S&P 500 and the Russell 2000, the brokerages are like, hey, like we don't really want to take on this risk right now. So they're increasing margin requirements. And when you increase margin requirements, anyone who is previously close to getting called, as in they were close to being too much of a threat to the brokerage, well, that's when margin calls go out. So whenever you see like high market volatility, expects margin to increase. And whenever you think of margin increasing, yeah, margin calls are going to be more likely. But I mean, man, this community is so it's conspiratorial. You don't call it for an individual stock unless that's the only thing. Like you call it on an account, not a stock related thing. A little bit of a misunderstanding there. So that's margin calls. Once again, no dates, no times. This is just representative of the increased volatility in the market. Are some people getting margin called? Yeah, but does that mean it's related to AMC, GME, or any individual stock? Well, no, not necessarily. It just depends on how beat up their account's getting. That's the best way to interpret this. The other thing, well, I guess before we go into that, I just want to give you a quick Vortex update. AMC, a net return of 1.84 million shares. Remember how return shares work? It's not shorts covering today. That's not necessarily how it works. Well, it's definitely not how it works. Short interest of 14.57%. GameStop, Borrow against it, 85,000. A small borrow, 14.91%. That's just the current up. Is it buffering? Someone just said buffering. I don't think it's buffering. I think we're good. I think we're A-okay, right? All right, yeah, we're good. So overall, that's the margin call. There's your Vortex update. The one that I see people talking about are the Parabolic Arc Pattern. So first of all, I've never heard of this before. If I'm being honest, this is not a pattern I'm familiar with. It's not a pattern that I've traded, but I know people are talking about it. And I just kind of want to go over some like quick facts about it, just so you're a little bit more in the loop of what this is all about. Parabolic arc patterns are very rare but occur in mega bull trends. These patterns form in bull markets where irrational buying is in the public generates a strong rally as the price rise almost vertically. The internet boom in the 2000s, metal boom in 25, 26. Parabolic arc is a reversal pattern that has a very predictable outcome. Although they are predictable, they are relatively difficult to trade since the market sentiment is bullish and always will be relatively tough to point out reversals on the trade. Most parabolic arc patterns have a significant correction of 62% from the top. So for the trade specifically, after a parabolic base, prices move up vertically and eventually the acceleration comes to a stop and then reverses. Prices start showing lower lows and may attempt to regain a top again, enter a short trade at the second failed attempt to test the peak. So what this is excuse me. Overall, this is way better. Like if you want to look this up, it's on Do Financial blog, the parabolic arc pattern. So basically, it's talking about a huge run up, and then it ends up coming down to a 62% retracement. And then from there, it bounces off the 62% retracement. Like I said, I'm not confirming anything. Remember, no technical patterns like a golden pattern that works every single time. That's just not necessarily how the market works. Really not at all. But it's just saying, hey, sometimes the deck is stacked in your favor, and you might just have a certain increased statistical likelihood of something playing out. And in this one, what this, I guess, author is putting forward is that when you see a huge run up, looking for a bounce off of a 62% retracement is apparently in your advantage, in the advantage of a bounce. So let me actually show you how this would be working relative to AMC. All right, let me go AMC. So for example, and all right. I want the 1 day chart. No, I want the 1 day. Okay, right here. So for example, let's look at the base of this run up. So this is what the author is putting forward. Like I said, I haven't seen it before, but they're saying you look at a crazy run up and then you look for a bounce off the 62% retracement. So let's start from the low, what did I just pick? I picked the low of January, February, mid-March, the low that I'm seeing right now, and the high. Well, look at where 62% is, right here, 61.8, that's the fib level. So they just call it the 62%. So 100% retracement, think of the clear, there's no like, I guess, specific trading terminology here. This is just like the word retracement of like what percentage it retraces from the run. So obviously 100% would be back where it started. 50% would be perfectly in the middle. So 62% just over the halfway point. And that's actually where we've been bouncing. The 62% retracement, can I get a number here, is 33.27 is that exact level. Obviously, it's not going to be specific to the cent, but kind of interesting. It shoots up, it comes down, the 62 bounce is right here. And just, I mean, if you look at these pictures, look at this run up, it consolidates and then it quickly sells. We have the run up, it consolidates and quickly sells. The only difference I'm really seeing in this chart is right at the end here, not so much of an extreme nature. Like here, it's like pure selling. This is a little bit more controlled, but no stock, no pattern is going to be such a perfect match like that. I mean, at that point, I'm like really splitting hairs to try to like pull out the difference. But anyway, if you want to look this up, Parabolic Arc Pattern, do financial blog, you can see if it's something you like, but overall it shoots up and then it bounces off the 62% retracement. And we're currently at the 62% retracement. It's the 61.8. If you're looking for the indicator drawing, what is it? It's the fib retracement. I'll use that. I'll use it when I'm doing charting like off stream just to see my own support and resistance. But this is the follow through that this author would be predicting. It bounces off 61.8 and it pops back up. So something to pay attention to. Interesting. Definitely interesting. All right. So what we're going to do from here, I want to talk a little bit about payment for order flow. This has been a hot topic, scalding hot. And the thesis going forward, or that I can understand, is that payment for order flow is the issue or one of the main issues of why AMC has not squeezed. My personal opinion is that I don't come away, when I learn what payment for order flow is and when I read about it, I'm not coming to that conclusion. Am I right? I don't know. I could be wrong. And like I said, I'm working on bringing on a payment for order flow expert. Currently in talks with Dave Lauer again, because that is his expertise, payment for order flow. He's very familiar with this stuff. I mean, so I think he would be able to open it. Like, so everything I'm saying now is with a caveat that like, hey, we might be changing it. I'm just trying to get like this thing, like what my job is to explain the hot topic items of what's going on. Right now, people are talking about this. I just want you to basically know it runs up, bounces off of 62. That's apparently this trading pattern. It's the first time I'm hearing about it. The margin call thing, I'm just trying to clarify. Margin calls, not specific to a stock. It's specific to an account, and they're increasing margin requirements, lowering leeway. The other thing that we should all know about, because everyone's talking about, is payment for order flow, PFOF. Payment for order flow is the compensation a broker receives for routing trades for trade execution. So right there, it involves market makers paying brokers, nothing about hedge funds. As soon as you see people trying to connect payment for order flow to hedge funds, right away, like a flag should be going off in your head because you're not going to see anything about hedge funds here. Payment for order flow is a method of transferring some of the trading profits from market making to the brokers that route customer orders to specialists for execution. Payment for order flow has been criticized by some by creating unfair and opportunistic conditions at the expense of retail traders and investors. So that's your quick, basically, if I had to sum this up, a market maker such as Citadel Securities or Virtu, and in this example, we know it's Citadel Securities, is paying people such as Robinhood, such as TD Ameritrade, such as Webull, such as E-Trade. The list goes on and on and on and on. To route their orders. They're saying, hang on, don't route your order to the New York Stock Exchange, the NASDAQ, this dark pool, or any of that. Don't route it to us first. They get first dibs. It comes to them. They decide if they want to take the other side of the trade. And if they do, they trade it. If not, they can then push it off to an exchange or a dark pool or another market maker. From there, they can push it off. But with all that being said, the price is not different. Just because they do payment for order flow or they're paying to get those, it's not like it's trading at a different price than New York Stock Exchange or the NASDAQ, because it's still the NBBO, the National Best Bid and Offer. So there's no discrepancy in price here. It's just more of like they're trying to fulfill it and play the other side of the trade. And their thought is if they're taking a lot of this trade, they just think that they could trade better. And then that's how they're going to make a bunch of money, is by playing the other side of the trade. People like Citadel Securities, people like Virtu, they're in the game of making money off a high amount of trading. That's all they care about. In fact, to my understanding, they give zero squats about the direction of a stock. They're in the game of how much volume can we possibly trade, because the more volume, they're making a little bit of money off each trade. So the more and more volume, the better for them. And once again, that's Citadel Securities, which is a market maker, which is different than Citadel, the hedge fund. And like legally, they're two different businesses. Like they've done enough of like whatever they need to to like say, hey, no, we're two different businesses. But that's like a whole different conversation of like, okay, like, well, are they helping each other out? Like that's for lawyers to decide. That's not my, I guess, expertise, and I don't even know if I could like legally comment on it. But I do know they've gotten in trouble previously. We've seen some SEC and FINRA filings for not necessarily filling their customers at the best values. They have been fined for that in the past. So if they got caught for that, that then also brings up the fair argument of like, well, how many times did they do it without getting caught? Like that type of a thing. But once again, that's something that we could leave for the lawyers to hash that out. But what they say, their argument is that Citadel Securities and Citadel Hedge Fund are two different business entities. So just trying to get that out there of what all that good stuff is. Just so you know, AMC moving right now, bouncing off of 32.75, and we're now pushing 34. I would actually recommend paying attention to this resistance next, the start of this wedge, 34.25, and then obviously 35. Okay. Here we go. So this is looking good. And then, okay. So payment for order flow before we get, I mean, it is kind of weird. There are various issues with it. It pioneered by Madoff, not a good sign. Anything pioneered by Madoff. The criticism is, one of the main criticisms of it is that in things such as the exchange, such as dark pools, it is widening the bid-ask spread, because what payment for order flow does is successfully segments the entire retail trading public. So that means that the other venues are highly, highly competitive. And when they're highly competitive, market makers are worried that like, okay, like they're taking on a bigger risk. So to take on less risk, they widen the bid and ask spread. So that's like one of the main criticisms. This AMC community is currently criticizing it for, I guess, being damaging to the potential of a squeeze. And that's very possible. I mean, basically what we have right now is someone like Citadel Securities, the market makers, has a massive asymmetric information advantage, a huge information advantage. So with that, it's more of how are they using that information? Obviously, they're arguing that they use it in a legal manner, and then some people are, well, hang on, like we caught you doing some illegal stuff before, how can we trust you in this? So that's the area where I think we need to bring on an expert of, okay, how damaging is it to the potential of a squeeze? I think that's a very fair question. And I don't think it's something that we should just say, oh, it definitively does or definitively doesn't, because at the end, like, we're not seeing any experts actually comment on it. A lot of the people, if we're being honest, a lot of the people who are throwing out this, obviously myself included, what it does and doesn't do, these are a bunch of statements being made by non-experts. In my opinion, payment for order flow is not a good thing for the stock market. That is my opinion. There's going to be people who disagree with it. I know it's illegal, I believe, over in the UK. There's many people who've already agreed that we shouldn't do payment for order flow. And what I know of its impact on the overall market, I'm not the biggest fan of that. I wish we could get rid of it. But a secondary conversation is, does it impact a short squeeze? And to that, I don't have the proof or evidence. So I can't say yes or no. I'm not agreeing. I'm not disagreeing. I'm saying the jury's out on that one. Overall, I think we should get rid of payment for order flow. But to answer the question is, does payment for order flow assist or deter or have literally no impact on a stock squeeze? Unfamiliar with that. And I think at that point, it's very safe to, okay, like, let's bring on an expert. And we're kind of seeing things like that across the board, honestly, in the community. A lot of people throwing out comments about dark pools and this and that. And that's why last time we brought on Dave Lauer to be, hey, okay, hang on. Like, a lot of people are talking about dark pools. What's just the deal with them? Like, it's okay. A lot of this community is very, very new to trading and stock market. And with that, when people put out things, they might be right, but they might be wrong. So it's okay to fact check. Like the overall, to me, one of the overall concepts is to seek truth. I think that's what we should be doing, is like, okay, this sounds good, this sounds bad, whatever it is, like it's okay to still try to hone in and find the exact truth of the situation. So as I find out more, and of course, when I get things ironed out to talk more with an expert about payment for order flow, obviously I'll let you know. We'll do that interview. I don't know if it'll be live. I don't know if it'll be recorded, but I think that's a good question on everyone's mind. So why not get the answer, opposed to, like, I don't know, trusting in a faceless, nameless social media account. Someone just asked, is Ape Fest canceled? Yes, it is. In fact, it's, well, I don't know if canceled, it's postponed. They're waiting until the squeeze happens, then they're going to run it. So it's more of postponed. Oh, and another thing about Ape Fest, I just saw, I'm going to answer this once and I'm going to put this to bed. And I didn't know I had to, because I mean, to me, it was kind of obvious, but I have no issue like clarifying. So there was a question of AMC, are people getting paid? What's going on? I can tell you this. I signed no contract. Not getting paid. It's not like I'm getting a cut of ticket sales. And I know it's dead, so it's like weird, like I'm beating a dead horse. I signed no contract. I was planning on going and meeting people. And then another weird lie where people are saying I was charging $1,000 to meet people. No. What? No. Who in the world would pay $1,000 to meet me? It's just crazy. So this is going to be the one time that I answer that. I had no contractual deal with Ape Fest or anything like that. I was not getting paid to meet people. It's all ludicrous. It's all lying. From me talking to the other people who were going to be there to be part of it, it's the same across the board. People were not, like, I didn't even sign a contract. Like, it makes no sense. And that's just the truth of the situation. So, I mean, it would, like, and people believe it. That's the most amazing thing. They're like, oh, I heard Matt's charging $1,000 to me. What? Where? Like, sometimes this community, like, the things that they're just like, oh, okay. Like, the only thing that's $1,000, folks, is my OnlyFans. And that's not a monthly charge. That's not a yearly charge. That's a daily charge. And I think it's free. I mean, I think it's accurate. It's not going to be free. It's $1,000 a day for my OnlyFans. Good luck finding it. You're going to have a tough time tracking it down. But it's, I think with it, I'm hoping that everything, the craziness of past week and this weekend, I was thinking about it like on my lunch break, the first lunch break I've taken in like 6 months. It's just, we just got to get back to these basics. I mean, people, maybe it's gone on for so long that they're looking for something to talk and start drama about, but let's just get back to the basics. Let's learn about trading patterns. Let's track the options. Let's look at the short interest. Let's go over the things that are actually happening. It's just not worth it to really, this drama. I hope we can put it to bed. I hope this is like the last day of it. There's 1,000 come with a happy ending. The 1K was VIP after party. It's a 404 page now, so it's not a lie. It's misrepresenting. It is a lie to say I was charging people $1,000. I have no idea about this after party. I wasn't getting a cut of squat. I didn't sign a contract. Like, it's just crazy. I mean, and I guess I thought I didn't have to say anything about it because like Trey addressed it. We're just like, we just thought it was a way to meet up with people and have a good time. It's honestly that simple. It's not some covert ops by Citadel to get us to meet at some hotel that they have a small equity ownership stake in. It's just whatever. But that's it. Honestly, this whole, the Ape Fest GoFundMe, I mean, if there's questions of like, oh, hang on, like, I mean, I don't want to say I'm not going to talk about it because if people are like, oh, like, am I going to get a refund and all that? Well, yeah, I'm going to be honest. I'm not going to be like, I can't talk about it. But in terms of the drama, like social aspects of it, it's just lies spread way, way, way more quickly than truth. Remember that. If there's one thing that will hold true about the internet, it's about, what's that saying? That a lie will travel the planet before the truth leaves the front door. Something like that. And that's just, people love it. I mean, people love it. And they run with that. So in terms of the drama, it is what it is. Um, I hope we can all, as a community, get back to like what's actually going on and like how this all started to begin with. Can I meet you for 1,000 doll hairs? Not the apes, just infiltrators. Keep doing you, bro. I agree with that. Matt's OnlyFans is worth it. How do you calculate the resistance lines? A quick explanation if possible. So support and resistance, it's literally where the stock's been rejected by before and where it's bounced off of. So earlier today, it was rejected at 34.23. So I just put it there. It was also rejected at 35.03. So we have another resistance there. It's just previous rejections and previous support. And the fact is that people are watching it. So it ends up becoming a self-fulfilling prophecy. Not always. I mean, right now, this is the intraday high, so I'm expecting to act as resistance on first attempt. But let's see how this plays out. You need to get back the map from January to June. That was the fun teaching map. Yeah, I was thinking about that too. I mean, obviously the weekend, it involved a lot of self-reflection. And there are so many things to teach about, and that's what I want to do. I mean, I'm very passionate. I'm very, I enjoy the stock market. I like what it represents. I like the game that it is. I'm a fan of it. And so with that, I want to teach more. I mean, there's so many things I want to do. And I think maybe in a certain way, I've been placating the AMC audience. Like I was talking to Trey about this, and like, it's just like, you're almost afraid to make a video that's not AMC because you get attacked. Like, I mean, on the weekend when AMC is not even trading, if I make like a crypto video because the crypto market's trading, people are like, how dare you? They're personally offended by it. And I know it's not many of you. I know, in fact, it's a small percentage, but there's so many other things to learn about. I want to teach you guys about options trading strategies. I want to teach you about futures. I want to teach you about algorithmic trading. I want to teach you about seasonality. There are people who are mad that I talk about IWM because they don't know what IWM is and they don't realize that AMC is a part of IWM. So right there, that's my fault as a teacher. And it's just because like there's so much pressure to talk about AMC. And like people legitimately get offended if you talk about anything else. And in the AMC community, there's a little bit of a pass if you're talking about GameStop, but I'm telling you, if you talk about anything besides AMC and GameStop, the hate, it just blows up. And Trey has had a similar experience with this. It's like, you're not allowed. And then it's funny because other people bash you. They're like, well, how could you not like do anything else? It's like, they get mad. They're like, oh, all you're doing is shilling this stock. I don't know. It's weird. When you get to a certain size on social media, no matter what you do, they could be like, I listened to Matt on his stream earlier today, and I just didn't like the way he was breathing. Like fuck him. I'm like, whoa. I saw one guy, his reasoning for disliking me was because I sound nasally. Like he had personal issues with me. Not even like, Matt's not my guy. Like, I don't really like his voice. Like, he actually like hated me as a human being because as like my voice sounded nasally, which I mean, I chuckled because like as if you could change that. But overall, the jarring experience that this past week and weekend were for me, I think if anything, it's pushed me to the point where, so like at first you want to avoid conflict. I mean, obviously, as you can tell, I'm not the biggest conflict person. I don't like conflict. Like, I don't seek conflict. I don't like, if I have to debate or fight, I will. It's just not me. Like, if I just don't like being angry. I've spent too much of my life being angry. It's just not worth it. But if there's anything I've learned about this, it's very much the concept that no matter what you do, someone is going to have criticism for you. And that's fine. Everyone has their own opinion. Great. Have criticism. But I think I just hit a mental exhaustion point of where I like feel like I have to do so much for the internet of like, oh, no, this is like what they want. No, This is now going to be very much, I'm going to attempt to teach and entertain in the best way possible. Those things I want to do, those things I'm passionate about, I'm going back to them. That's how this is going to go from now on. I mean, it's to the point that it's not like the hate can really get much more. So I'm going to do what I think you guys could really benefit from to learn in terms of the internet. We're going to be talking more about option strategies. We're going to be learning about crypto. We're going to be learning about the futures market. We're going to be learning about algorithmic trading. I'm going to be talking more about the trading books that I've been reading that I think a lot of people would benefit from. And I'll like give you a synopsis of it. Just more and more stuff, like more active trades. This is not the market. I mean, it is the market. But the way I trade, and I've been trading for a decade, I feel like there's so much of my trading career and like what I want to talk about and everything like that, that's not being shown. I mean, before this, I had 9.5 years of other types of active trading, day trades, swing trades, long-term investments. And especially for the newer apes in the community, I don't want you going away thinking that trading is the world of you find a highly shorted stock, you sit in it, and you argue with people on the internet. That is not trading. It can be a part of trading, but it is not the exclusive nature of trading. Obviously, it's somewhat of trading because people are up a lot of money on AMC right now, and that's great. And I'm not saying I'm not going to talk about it. I'm saying I'm adding in other types of content. I will be continuing to talk about AMC and GME and everything else I listed. I just feel like I care too much about this community to just act as if this is it. There's too many other things for me to teach you something and for you guys to all teach me something. There's just too much going on, and this concept of like, no, you're only allowed to talk about these two. Okay, no, I mean, I feel like that game has been played, and I tried to play that part a couple weeks, a couple months, and I'm so tired of it because it's just people who know nothing about the market trying to tell me how I should run a channel that's related to the market. And it's silly. And I don't know. I think there's like, if I were to do a psychoanalysis of myself, I'm sure there's various reasons of how you got here. Cause like just life's crazy. You quit a job, you want an income, blah, blah, blah. The list goes on and on. Like no one wants to get like absolutely raked over the coals, but I did it. I made it out on the other side. So it's time to do the things like I actually care about. And I could already see it. I'm not stopping about AMC and GME. I'm just including additional things because you guys deserve it. And I think that's what's interesting about this little test run this week is even like this. We talked about margin. We talked about payment for order flow. We talked about parabolic arc pattern. With this like dual session in a day, it allows me the opportunity to formulate some sort of almost curriculum of like, oh, okay, no, like this is the lesson where he talked about iron condors. This is the one where he taught us about gold futures. Like I can actually give back to you, I believe, and at least what I'm attempting to do. Nothing's guaranteed. My teaching ability is the same as the market. Nothing is guaranteed. But I like it because I think we can actually like continue to grow and create a catalog of various teaching things. And then of course, if something's going crazy in the market, we could talk about it. But I think to me, that's what a community around trading is. Not necessarily like bullying people into doing stuff because like you're not the arbiter of their financial situation. All right, so that's the plan going forward. It's going to be a full send. Will it work? I have no idea, folks. I'm figuring it out along the way with you. That's how this is going to run. Pure guessing, but let's see. I've waited 4 years to be a millionaire. What's a few more days, weeks, months? Shout out. Parabolic arc chart. Yep, we went over that. If you want to rewind to the start of the stream, we like went into in depth. What is the parabolic arc chart? And also the margin call thing. The margin call thing is what we covered. Hey, Matt, can you explain RM call on cash account? I saw it on my account after an account risk level was increased after 34%. Explain an RM call? That might be a form arm call. Yeah, required maintenance. So it sounds like it's a form of a margin call where you're just going to need to put some money. I think your account fell below some sort of a threshold where your broker perceives you as presenting too much risk. So it sounds like you just need to put some more money in. Matt, when you explain things, my smooth brain understands. In my opinion, that they're using PFOF to route larger buyers to dark pools of their choice to delay the impact on the price while shorting, selling, scaring people away. So unknown name, they actually wouldn't want to do that. Remember, payment for order flow, the reason they're paying for it is because they want to execute on the trade. They wouldn't pay for it just to let someone else execute the trade. That to them, that would be a waste of money. That's why you do it. So unknown name, I see what you're saying, but it just, you're paying for those orders because you want to trade those orders, not because you want to pass them off somewhere else. Someone watching a terminal this morning tweeted that a 4K sell wall disappeared suddenly. Was he hinting towards spoofing? Thoughts? Could be. I mean, right now, depending on your brokerage, you might be able to put in a sell order at whatever price. So someone might be putting it up there, but also I think spoofing is more effective when it's closer to the current bid and ask because then more people are seeing it. So I don't know, tweeted a 4K sell wall, like up at $4,000. I mean, if you put it there, I don't know how much of a psychological advantage that would present to you because who would really see that? So buy walls and sell walls can be a huge psychological game. If you see a lot of buyers, see a lot of sellers, they can pull the order, they can hide orders. That would be a dark pool thing. So the 4,000, I mean, if I just saw someone trying to sell some shares at 4,000, for me personally, I would just say, oh, like, okay. Like, I don't know if it would really do much. Appreciate the endless hours you put into the community. Shout out, Kelly. Hey, Matt, love what you do. Thanks for everything. I'm interested in Citadel Connect and FINRA's alternative display facility, that POFF right now. Would love to see some content on those when you have some time to dive in. Okay, so you're asking for Citadel Connect. And yeah, so I've already been researching it. And the interesting thing about Citadel Connect is it's actually way, way, way deeper than a rabbit hole than you'd think. So I'm trying to collect a little bit more information on it just so I can, I guess, put together a cohesive video without me rambling too much. But I'll write that down. And FINRA's FADF. FINRA's alternative display. Got it. Shout out to Jesse, Sal. Chair doesn't even show hydraulics. Shake my head. Matt, can I pay for a ticket to come hang out with you on your couch? Food on you, though. What's going on? Devin's Law, shout out. Matt, I saw on Reddit post saying you're handing out free Cheez-Its at Ape Fest. What would a market crash mean for the stonks that we love? Okay, so very, very interesting. This is a good question. If at large the S&P 500 and IWM crash, what would that mean for AMC? Very, very good question. And unfortunately, there's not a direct answer because what you're referring to in a market crash is people lessening their risk or maybe getting margin call. So then it comes to the question of, well, who's going to fold first? Who's in more danger? The people who are long on AMC or the people who are shorting AMC? Yes, it's easy to live in a world of confirmation bias and think, okay, if the market sells off and these other hedge funds are long on stuff and they have to cut, they might cut an AMC short. But on the other hand, you have the other situation of like, well, hang on. What if you have people who are long on AMC and they're getting margin called? They might choose to cut that. it could go either way, and it just depends on the specific hedge fund and their very specific situation. A market crash, no one could tell you that it's definitively good or definitively bad. It depends on who gets into more trouble first. That's what it is. Who gets into more trouble first? The people who are long on AMC or the people who are short on AMC? And with that, like, you would have to know the insides of all these companies and like what they're doing in their positions and their current risk management. The real talk is Chair's only fan. Why hasn't Godzilla returned to Japan to fend off the leaking radiation from the Fukushima power plant? Matt, check out the 4-hour chart. Big W. Shut up on the 11th. Any thoughts? So I believe you are referring to this W, and it's, if we get this follow through, it would be a perfect W, and confirmation would come right above 39.70. So let's say confirmation above 40 roughly. But here's the first 3 parts of a George W, and we're looking for that breakout above 40 to like really kickstart the final part of the W. So when you put that together with this parabolic arc pattern, it's interesting. It's definitely interesting, and I would love to see it come to fruition. Matt, I question everything in life, but I've watched for ages and I don't understand why you get this negative hassle, but just stick to doing you. My dad's girlfriend's boyfriend. PD2, what's going on? True Moon Gang will be here. Shout out to Ben. Kevin, same thing for you for Citadel Connect. I want to make a whole video on it because it is way more than I guess what meets the eye, and it's interesting. It's interesting to see. I don't know. It's more of Citadel business, stock market plumbing. It'll be a good one. Greg 737 reached over 400 today. GME, AMC. What can we expect in comparison? So looking at the comparison for January, late January on GameStop, that's not a fair thing. You can't really look at those numbers because remember, it was driven by the retail public, and major retail brokers such as Robinhood stopped the buying of the stock. So you can't compare the height of the spike in January to anything now because it was stymied, it was muted, it was stopped in its tracks because people could not buy it. A lot of people, not everyone, obviously someone out there was buying because someone out there was selling, but the main retail brokerages stopped the buying of it. So to look at those numbers of where GME got and to try to apply it to now, I don't think it's the safest thing to do so because that was more of an outside influence that stopped it. I'm shorting Matt's OnlyFans. Matt, did you see my Twitter DM I sent you yesterday? Brendan95. Maybe, I don't know. There's lots of DMs and messages. I'm still trying to go through them all. If I'm being honest, they haven't been the most fun to read, so it's not like I have been overly giddy about reading my DMs right now. I don't like your perfect hair. It makes me jealous. Hey, Mark, just heard you're paying 1K to meet you. Oh, brother, can I request tulips with my meet and greet? You're awesome, bro. Keep doing you. Shout out, Brian. Do more crying in the shower videos on OnlyFans. 2 things in life you can never achieve: avoiding conflict, pleasing everybody, so don't try. Shout out to K-Dog. A lot of haters are probably not even invested in the stock. They're just trolls jumping on trending topics. All of this sounds like someone who doesn't want to run 10 miles on a whim. Thank you for showing up every day and hanging out, Matt. We love you. So today, I think training starts. I mean, I believe the Olympics starts this Friday, so I have Monday, Tuesday, Wednesday, Thursday. I have 4 days to get ready for the Olympics. So we're going to be crushing it. We're going to see what kind of run I could do today. And I'm going to give myself a week or two to get in shape. And we're going to see how this 10-mile thing plays out, 10K. I don't know. We're going to do some sort of run. But people they talk about physical fitness and good diet. You know what gets me to run? It's just like copious amounts of stress and anxiety. That's what you need. If you need something to fire you up and really push you through a run, so that's what I'm banking on today. That's what we're doing. You know, you can't please all the people all the time. And last night, all those people were at my show. Thank you. I'm looking forward to that additional content. If people want to learn to chart, TradingView offers free charts and tools. Shout out to Adventure Joe in Hawaii. Hope everything's going there. It's your channel. Use your platform how you want. Stay positive. Shout out. Lots of Chris's in the house today. I believe Citadel is using payment for order flow to route large routes to dark pools of their choice to delay the impact on the price so they can sell short and prevent FOMO buying. What's your theory? My theory is that why would they don't want to route it away? Payment for order flow, you pay to get the trades, and then you're paying because you're making money on playing the other side of that trade. If you pay for it and then intentionally route it away, that means you're burning money. Whatever they pay for every batch of trades, they want to profit more than that in doing so. So to pay for it just to route it away, well, that makes it automatically losing. So you said, I believe Citadel is using payment for order flow to route large orders to dark pools. My answer is, why would they do that? Because then they're losing money. If they're not taking the other side of the trade, then they're losing money, or at least attempting to take the other side of the trade. For them to pay just to route the trade somewhere else, that's a extremely poor business practice. Citadel Securities is a lot of things, but they're not stupid. They're in the business of making money, so they're not going to go out of their way to do something that intentionally loses them money. Member, new, message retracted. I like the mystery. To fight the shorts, I'm going commando until the squeeze happens. Stonko Tractor is showing 50% short interest. Okay, you mean short volume. Remember, short volume is not that useful of a metric. The reason why, so hang on, what was it on Stonko Tracker? Here, let me bring that up. All right. So let's check this out. SSR is on. We know that. We know this. Okay, so right here, if you're looking at this is short percentage of the amount volume shorted. This is what's referred to as dirty data. You see it on Stonko Tracker. You see it on Fintel. The reason why this is called dirty data is because short volume is composed. Is it composed or comprised? Composed of, comprised of, composed of, comprised of. Let's go with composed, but if there happens to be an English teacher out there, let me know. I think it's composed of. Short volume is composed of two things. Number one, legal, legitimate shorts that are swinging the position. They're actively betting against the stock. Part two are high frequency trading, HFTs, who are in and out before you can blink. Both of those together, it is, oh wait, some people are saying comprised. It is comprised. One is right and one is wrong. A lot of people are saying comprised. All right, we'll go with comprised. Well, someone says composed. All right, another thing I'll have to look into. Anyway, before I went off that, all right, volume, it's two things. Legal, legitimate shorts who are attempting to actually bet against the stock and hold the position. The other part is high frequency trading they're in and out within seconds. They short, they buy back. So with this number, we don't know who is who. We don't know if a high portion of this number are legal shorts, high frequency traders. And the reason this high frequency trader thing is important, because they're not bullish or bearish. They're essentially just soaking up liquidity, or they're providing liquidity. They're liquidity players. So they're not really betting against the stock. They're just like in and out within a microsecond. I'm like, legitimately, in the time it takes you to blink, they might have traded thousands of shares. So they're not like actively providing selling pressure. They're providing liquidity. So when you're looking at short volume or the percentage of it, I like to see the trend. Okay, I'm like, okay, 38, 43, 39, 57. I'll see the trend over a couple days. I think you could get some utility out of that. But to just look at that number, it really doesn't tell you much. So that's the rundown on short volume percentage. I like the trend over multiple days, not necessarily the magnitude of one day. You can't draw much from that. So we did that. Hey, you do what you want. I'm lucky to watch. I'm all up in your comments telling Greg's to shut up. Yeah, Kinky Kong. I saw you responding, and I still love this name, Kinky Kong. I will never not smile when saying that. Can't Citadel use payment for order flow to route large buy orders to dark pools of their choice to delay the impact the order has on the current market up to 7 days to prevent call options from hitting, and also stopping FOMO? No, I have not seen anything about payment for order flow delaying orders up to 7 days. Payment for order flow, delaying orders. I mean, does it talk anything about delaying in here? So here's the payment for order flow breakdown, delay. I'm not seeing anything about delaying, and maybe it's just not here. Maybe someone has a piece of information that suggests that, but I haven't seen the connection between payment for order flow and a 7-day delay, especially because in this, it's still, it doesn't make sense to me, because in T2 settlement, so like if you're on a cash account, even if you're using payment for order flow, that trade is actually settled in your account within 2 days, probably 2 days within seconds after you placing the order. So I don't know why it would be a 7-day delay when we know people legitimately have the share after a 2-day settlement period. Like even in a cash account, that asset is yours. Maybe, and that's something I will ask about and dive into. But the red flags in my head are going off, because like what I know about stock market plumbing, I don't know how you would hold an order for 7 days, no less for much longer than a couple seconds. I mean, we've previously seen Citadel get in trouble for delaying orders, and that was to the tune of like a couple seconds, no less 7 days. But AMC moving and grooving, trying to make a run to 35. Check it out. Can you explain why the market cap for AMC and Robinhood for AMC on Robinhood and Webull, if I use it, price should be in the 50s? Probably because Robinhood does some sort of weird averaging and it's not updating to the tick the way that Webull does. Right here, the market cap currently of AMC is around 17.2524. I mean, you could see it updating live as AMC moves. You could see this number changing. Like these are the live updates of AMC's market cap, because market cap, all it is the current price multiplied by the amount of outstanding shares. That equals market cap. They're not setting market cap. Market cap is a function of current share price and total amount of shares. Cover the content you want and your following will turn into community you want to be. You're going to P.O. Box Friday. I sent you a B-Day present. Check out Diamond Handed Ape on Etsy for a preview. Rebecca Lewis, yeah, definitely going probably on Friday. So if anyone wants the P.O. Box, it is in the description of the video. Lots of sour people in the world, but don't let them get to you. Shout out to Chad Walker. Thanks for everything you do. Glad I live in Vegas or no Memphis. I'm still going to go play some craps. You're always welcome to join. Can't wait to learn more. Mr. Jack Frost. Expect it in a week. Dustin, very, very excited. Keep on keeping on. Do you think moving your stocks to Fidelity or another platform to do direct routing to the New York Stock Exchange, would that be any beneficial or not? So you don't necessarily have to move your shares. It's all about buying the new shares. Like, you can have multiple accounts. That's perfectly acceptable. That's like a legitimate thing you can do. So if you already bought shares on something that used payment for order flow, you can't really undo that. Citadel already got that. They probably executed the other side of that trade, and it's all about your new trades. So if you want to avoid payment for order flow, there are apparently some options, and one of them is the Fidelity direct routing. If that's something you want to engage in. But I mean, if you want to transfer, you can transfer. Like, that's okay. But just so you know, transferring stocks you've already purchased doesn't really have anything to do with payment for order flow. Payment for order flow exclusively impacts your new trades, your new buys, and your new sells on any stock. It's not the ones that are already sitting in your account. Hi, hear my Ken joke on Andrew. No, but I did see Andrew taking my magnets, trying to take my magnet charting technique. And boom goes the dynamite. Payment for order flow allows them to route order to a dark pool. Dark pool allows up to 7 days before posting to the market. So that could be true, but posting to the market is very different than an actual trade. And even that, I haven't heard of a 7-day hold, because we live in a T2 settlement. So if anything, it would have to be less than that. How could it be a 7-day hold if the shares are fully transferred into your account within 2 days? But still, why would they go to a dark pool? Citadel Securities is losing money on that trade. Unknown name. I like the point you're bringing up, but it still comes back to the main concept of, why would they not want to take the other side of the trade? Like, why would they push it off into a dark pool? Because they're losing money then. Is Matt to OnlyFans Matt Money or Kinky Kong? Maybe rerouting to the dark pool is the price of business. The scenario in which I would believe this is if a dark pool then paid Citadel Securities to do a different payment for order flow. So if someone can provide that evidence, okay, well, that's a different story. But on their own volition, Citadel Securities would not want to pass off those orders, because every time they do that, they're then losing money. They want to actively take the other side of the trade. They want to increase their own volume on their non-ATS before passing it off to an ATS. And just so you know, ATS, Alternative Trading System, it's the fancy lingo for saying dark pool. All right, we are making a run to a new intraday high. Is composed of means roughly the same as comprises. Comprised means include or contain. ELA, teacher, wife, both parents, lit teachers. Thank you, Jim. When did SSR turn on for AMC? Reddit AMC posted the S3 score is 100% of a short squeeze. Is that true or FUD? AMC, SSR went on earlier today when it dropped 10%. And since then, we've been rallying. It went on early this morning. It is on SSR short sale restriction. It doesn't make it impossible. It just makes it more difficult to short. That was your first part. Posted the S3 score is 100%. So that, remember, Gary, that's not guaranteeing anything. They're just saying, hey, the way they do an analysis, they're saying that there's a high likelihood, but it's not guaranteeing anything. But just to say that, I also haven't looked at the S3 in a while. I'm just saying, you would 100%. No one in the stock market guarantees squat. They can't, because it's too unpredictable. They're S3, if they did say it was 100%, that means it's like one of the most likely to squeeze, and it's worthwhile to watch. But for them, I would assume maybe they just tweeted it out. I would say that's how you check it. I mean, if your argument is truth, I love these Reddits that they post their sources and you can see where they got it from. That is awesome. We need to continue that. But if it's just a Reddit comment with no backing, well, that should be a red flag. So Citadel has first dibs using payment for order flow. Couldn't they not take the other side and then reroute it to a dark pool? If you're seeing an issue, maybe just a quick refresh, that might help. If everyone does a quick refresh, I think we're going to be good. Since Citadel has first dibs using payment for order flow, couldn't they not take the other side of the trade and then route it to a dark pool? They don't pay if they reroute it, do they? No, they do pay. Once the initial one gets routed to them, they're paying. That's what they're paying for. And from there, they can do with it what they want. They can reroute it. They can execute it. But can Citadel route it to a dark pool? Yes, they can. Would they want to? I don't see why they would want to do that. It would lose them money because if they're not taking the other side of the trade, they're just literally a middleman losing money. AMC and Jamie back in lockstep, good sign. I don't know if it's necessarily good sign, but today the action seems pretty similar. Hey Matt, can you explain required margin call on Webull? My account was marked as risky, but I thought they could liquidate some assets on a margin account only. So basically, you're playing with more money than your account has. So you either have to deposit money or you have to sell some of your stuff to get under the required margin call. Like you're basically, your account got margin called is what's going on in Voldemort. Are there any implications of day trading ETFs? Just the same implications of trading any stock. If you have like a cash account or a margin account, if you're battling PDT or something like that, if that's what you're asking for, like you still have to abide by the rules of pattern day trading or a free roll violation or that type of stuff. Can we borrow Hood shares from Robinhood to short Robinhood? I've read that dark pools can delay reporting orders for up to 7 days. Citadel might route orders to dark pools to prevent call options and FOMO. Could be true, unknown name, but I've never found that. I've myself never heard of dark pools reporting order, like dark pool order. I could search it. Does anything come up? Order delay. Dark pool order delay. All right, so let's look this up. Delay. Trade execution details are only released to the consolidation tape after a delay. So that's not the trade being delayed. That's the trade execution details. It's like the details of the trade are posted later, but not the trade itself. That's the only delay thing I'm seeing under this. Contrast with is a present day situation where any institutional investor can use the dark pool to sell a 1 million share block. The lack of transparency actually works in the institutional investor's favor since it may result in a better realized price than if the sale was executed on an exchange. Note that as dark pool participants do not disclose their trading intention to the exchange before execution, there is no order book visible to the public. Trade execution details are only released to the consolidation tape after a delay. So it's just the details of it, but like the trade is still going through real time. The institutional seller has a better chance of finding a buyer for the full share block in a dark pool since it is a form dedicated to large investors. The possibility of price movement also exists in the midpoint of the quoted bid-ask price is used in the transaction. Of course, that assumes that there's no information leakage of the investor's proposed sale to that dark pool is not vulnerable to high-frequency trading predators who could engage in front-running once they sense the investor's trading intentions. So right there, remember inherently, like theoretically, what's a dark pool for? It's for more competitive trading. It's so people don't know what you're trying to do. And right here, where institutional investors can use a dark pool to sell 1 million share block, they just know other people are in there. The lack of transparency, it's keeping your cards very close to your chest. You don't want people know you're buying 1 million, selling 1 million. You don't want to get completely like your face ripped off by high frequency traders. It's so you can make trades without, I guess, getting damaged by other players, especially robot players. So unknown name. I'm not saying that you're wrong. What I'm saying is just like I haven't come across the same information you've come across. So if you have, I've read that dark pools can delay reporting orders for up to 7 days. Reporting an order and like the actual execution of it are two different things, because I think you're referring to reporting the details of a trade execution, which is very, very different than an actual trade execution, which is going to get like impact the price in almost instantaneously. Two different things. But the buy to sell ratio was 2-to-1 last week and the stock dipped, which is highly unlikely. Are they hiding sells through dark pool? Sells through a dark pool. So the buy to sell ratio is just referring to this of, are they hitting the bid or the ask? It's a buy if someone is traversing the spread and hitting the ask, and it's a sell if they're traversing the spread and hitting the bid. Remember, with any buyer, there is a seller. With any seller, there is a buyer. That gets a bit wonky with naked shorting, but that's just borrowing from someone, like I should say from no one when they should be borrowing from someone. So that's still not buying or selling. Whenever you buy, someone is selling, and whenever you sell, someone is buying. Just in certain circumstances, someone is selling you stock that should not be selling you stock, and that's naked shorting. Have you heard of Citadel Connect? I have. We're just looking up on it. Josh, what's going on? Been here since late January. I have so much respect for you and your knowledge. You have changed my life for the better. Thank you. Up 15.4 thousand. Matt, I was sad not being able to listen to you on lunch. Glad you're back. Sorry to hear about all the FUD this weekend. They hate you because they ain't you. Shout out, Brett. Andrew, I have not spoken with Peter Hahn. Remember, I had some confusion. Like he was saying that you could hide an FTD in IWM. You can't hide a failure to deliver in an ETF. An ETF is a basket of stocks. It's not something you would hide an FTD in. I hope so. They have to read this out at deposition one day. Unblinking Hedgie Kenny has the face of a man in an elevator angrily bragging the flatulence you smell is his and rightfully belongs to him. When GME and AMC charts mirror each other like they are now, is that evidence of institutional buying and selling? Doesn't that mean like retail action? I think it could be some retail action, but if anything, I would argue that it's more of institutions or hedge funds who are using some algorithmic trading. Remember that high frequency trading is a type of algorithmic trading, but there's other types of algorithmic trading. So the reason I'm bringing this up is there's probably some computer systems that are scanning these stocks, and if they're seeing something similar happen, they're both going to buy or they're both going to sell. And when you do that, the charts end up looking the same. Jerry Beans with an absolutely massive super chat. Jerry, that's incredible. Seriously. I appreciate that. If it was an accident, just DM me or something and I'll get the money back to you. Incredibly, incredibly kind. If so, I appreciate that. Definitely not expected by any means. Open the lounge. Matt, I sent you a DM on Twitter, Citadel head of execution services, talking about holding inventory, aka delaying orders, same Twitter name. All right, I'll look into that. Matt, the bid on GME keeps flatlining. Thoughts? Remember, this is just the bid of the New York Stock Exchange. It's not the bid of all the venues. So it's not close to the complete picture. This is just the NYSE. Are we forming a cup and a handle? I would call this a cup and handle. Like, I wish it ran a little bit more, but yeah, to me, what we're seeing on AMC and GME right now is pretty bullish on an intraday pattern. How and who is verifying that order flow is matching what goes into the dark pool and then into the lit market? Who? Probably no one, because you don't have to cross-reference a lit market to a dark pool. They're just two different venues. They're independent venues. So the way you could buy a new Xbox from Walmart, you could also get it from Best Buy. Like, one's a dark pool, one's a lit exchange. You just don't, like, it's just two different places where you can buy something. It's not like Best Buy and Walmart have to check the number of Xbox sales with each other at the end of the day. For the squeeze, keep it up, Ape Nation. Hey, Matt, Peter Hahn said the current whisper number for off exchange is around 5,000. What does that mean? No clue. Sounds like some weird form of baloney to me. Off exchange, whisper number for the off exchange is around 5,000. I mean, Citadel Securities is off exchange. All dark pools are off exchange. Most trading happens off exchange, like as in over 50%. So I don't know what that would mean. A whisper for off exchange. That doesn't make much sense to me. Did you get a chance to view? I featured you in it. I know you're busy, so no worries. Carl, I didn't. I mean, obviously you're aware of the insanity of the weekend, but looks like I should have some time this evening. Any chance of you getting back into YOLOing Tesla options? I miss the excitement. I want to. I miss those days. All right, hang on. We have Jerry. Okay. Jerry, can you DM me? Jerry Beans, can you DM me on Twitter? All right. So GME looking strong, pushing 175. AMC 3460. IWM being weird. SPY trying to come back. Interesting. I think we are good. Hang on. Where are the questions? Never forget that the real shills are the friends we made along the way. Can we learn about Forex? And I remember you want to talk about futures a few weeks ago. Love the content. Keep up the great training encouragement. I'm not really that knowledgeable about Forex. Like I've traded a little bit, but I am not the guy to talk to about like the currency exchange. Help me understand Benzinga's post. So bullish just means that they hit the ask. So someone aggressively got into that sweep position. The 7-day hold is talking about a T6 settlement, which applies to market makers who take a short position in order to take the other side of the trade. The market makers gets T6 settlement to settle the short if they are naked short. This is documented in Reg Show. Okay, so that makes a bit more sense to me. So it's still not a dark pool thing. It's also worth pointing out that this does not determine whether they can or can't route our trades through dark pools, but it does give them discretion as to where the route the trades. Yep, that makes sense. They could do it. But also, yeah, so they can route it wherever they want, True Demon, 100%. But if they do route it somewhere out, they're losing money unless they're getting paid a fee to route it to someone else. The market makers can choose to settle the trade instantly via an exchange, or they more commonly hold the trade on their books, consolidate them into blocks of shares, and buy them via dark pool in order to not impact the market price. We have been speculating that they are being selective about which sides of the trade they settle via dark pools versus lit exchanges in order to impact the price in the direction they want it to move. But like you said, that is still speculation with the price. Everything I've ever read about market makers, if anything, they're just trying to hinder any movement, whether up or down. They want a lot of volume that trades sideways, is like a market maker's dream. So let's go back to what we do know. The market maker can choose to settle the trade instantly via the exchange, or more commonly hold the trade on their books, consolidate them into a block of shares, and then buy them via, if they're buying, that means that if they bought off a dark exchange, hold the trade on their books. Well, it depends, True Demon, on what way that trade's going, because you're saying holding the trade, but is that a bunch of buying or a bunch of selling? Like, I'm sure at one point it has to kind of net out. Thanks, Matt. Just so you know, remember that you can bullishly play a put. If you sell a put, that's actually a bullish bet. Puts themselves are not inherently bearish, and calls are not inherently bullish. Buying a call and selling a put are both bullish. Selling a call and buying a put are both bearish. So if you're selling a call, remember it's not the exact same as hang on, let's get this right because it goes opposite. Buying a call bullish, selling a call bearish. Buying a put is bearish, selling a put is bullish. So you have two bullish options: buying a call and selling a put. Remember, you can do both. Like, you're allowed to sell either of those to create a position. So they do have a different risk profile for sure, and it's something to like learn about without a doubt. But it is not, I guess, this concept of like puts are exclusively bearish and calls are exclusively bullish, not how it works. So for you, if you're aggressively selling puts, that's technically an aggressive bullish action. I'm calling Jerry Jones to show our games at AMC since everyone loves or hates the Cowboys. Let's go. What's going on? Oh, hey, Mark. Since A lot of these haters talking this weekend about you, mostly about super chat. So here's a super chat to keep pissing them off, Moon Gang. All right, we're looking good. AMC. What is the green? Previous close 34.96. We were 2 cents away from going green on the day. 34.96 right here. So let's get rid of this top one because this is the. We were green for a second. 34.96 is the red green move on AMC. We're currently at 34.43, and then GME is at 174, and GME is actually up 3% on the day. To be aggressive, are you slamming your finger against the button? Yeah. Breaking nails, breaking fingers. The market can sense how hard you're pushing the button. Don't ask for Vortex. Let's do a quick Vortex update. All right, we don't need Stonko tracker. A return of 1.9 million shares, a return of 3 million, a borrowed share of 1.25, short interest of 14.56. Please don't let these numbers get you in a tizzy. Remember, these returned shares are one of two things. Shorts that covered 2 days ago. Let's see if that's likely. It could be. 2 days ago, we went from 31 to 40. That could possibly explain it. That's a very fair, legitimate explanation. Shorts that covered 2 days ago, T2 settlement. Look at that makes sense. Remember, it's not saying, this does not say shorts covered now, live short, or anything like that. It says return shares. To return shares, it's either shares that went on loan, were never shorted, and are now returned, or it's shorts that went out on loan, shares that went on loan, shorted, covered, and then waited 2 days, and then they were finally returned. We don't know the proportionate breakdown, but we do know the stock went from 31 to 40. And if that's what we get for every 3 million of covering, well, if we have 96 million, I'll take that, because that means an explosive move higher. And that's just in that. I mean, that's not talking about gamma. That's not talking about FOMO. There's a lot of other things that would be baked into that particular cake. Kelly, for the Cheez-It fun. What's going on? Is buying a bear bullish? Is selling a bull bearish? Is selling a bear bullish, or is buying a bull bearish? Or is buying a bear of a bull both ridiculous and potentially dangerous in general? Depends on the bear. Depends on the bull. Is West Christian punishing hedgies still on the table? To my understanding, the most recent update I got, which was yesterday, the GoFundMe is no longer and the money is being returned. All right, I think we are up to date. Hang on one second. The real question is, buying an ape bearish or bullish? Harry, thank you. Thank you, Harry. Hello, hello. Oh, brother. I don't think we've had enough old brothers today. Is that what's going on? It's just, it's a new paragraph. I can't even say a new chapter. It's a new paragraph. And I feel like this paragraph is missing out on some serious old brothers. And we're also missing out on standing. Let's help AMC go to the moon here. Come on. Let's stand up. What's with this $1 million token thing? It sounds like another scammy thing. So I'd be careful with that. Whoa. Be careful. Might be legit, but when it comes to money, approach it all with some level of hesitation, especially with in the realm of a community that's, I don't know, sizable, well known. Where's the hat? Um, all right. If you guys are looking for a full on breakout, we could do something. We could get a little crazy. Someone sent me this. We have a Donkey Kong hat. All right, so we're doing this, the full on Donkey Kong hat, to look for a red green move. We're pulling out all stops. We gotta kick off the week in a positive manner. I wish you could see him a little bit more clearly. All right, there we go. This guy means business now. I can just picture it. Hey, honey, you told me that Matt kid had a pretty rough weekend on the internet. How does he seem to be holding up? Well, seemed a bit odd. He was a little calm, a little bit tense, and then I don't know. I think we finally broke his head. The West Christian move seemed like a really important move. Could you and Trey head that up, or would it be something that Adam Aaron would support? I have no clue. For me, it's something I'm not going to touch with a 10-foot pole at this point. Seems pretty toxic. I mean, it's prompting. There's just so much infighting, so much infighting. Whether something would benefit us or not, when you have such a overwhelming wave of malice, it's just not going to be pulled off well. Market makers selling options and steering price to max pain level for reliable profit. Max pain last week was 170. This week it's 180. Check historical max pain. So that's something I would definitely get on board with. Do I think it's, do I know that it's theoretically possible for Virtu and Citadel Securities to play nice in order for them to not screw themselves on the certain options they've sold? Yeah, I would. There would be no checks and balances on that. If Virtu and Citadel have like a quid pro quo of like, hey, we helped you out last week, could you help us out this week? If the duopoly of market making lined up their intentions to help one out and be like, hey, we need, yeah, yes. It's questionable to the degree that they could, but okay. I wish I had the tinfoil hat. The tinfoil hat, I can't switch it now. So this is going to be a Donkey Kong explanation. With the Donkey Kong hat in mind, would it be theoretically possible? Let's say that there was a bunch of options expiring at 40, 45, 50, and whatever, just pick a number. And like, let's say we had a lot at 50 and we're trading close to 50. Would the market makers have enough power? Let's say it's trading just above 50 right before market closes. Could they drop the price? Yes, without a doubt in my mind. The question is, so like, what degree could they do it? If it was at 52, could they drop it $2? If it was at 55, could they drop it 5? Well, that's in the realm where it gets a little bit weird. But if it's close, like however you want to define close, they could totally 100% do that to ensure that some options expire worthless. But they could also do the other end. If it's right below it, they could run it up a little bit just so maybe certain puts expire worthless, but calls don't. Remember, when you're looking at the calls, also understand that they're selling a lot of puts too. So they're going to do whatever net beneficial to them. Sometimes that might be favoring the calls. Sometimes that might be favoring the puts. Or who knows? This is all just like an allegation anyway. So maybe it doesn't happen at all, but I bet it would. From 1 million token and 1 million token army, we are definitely legit in doing big things. Find out yourself. Happy cryptoing, lions roar. That's from 8-Minute Mile. Okay, I mean, I get you're all about the 1 million token thing, and you're very generous to donate $100 to like pump your own crypto, and like whatever. Best of luck. But can we talk about your name, 8-Minute Mile? That's something we need to dive into, because I myself am about to run many miles just to see what can happen. Just like a fun little physical challenge. So I want to know if you're really running an 8-minute mile. Yeah, about the infighting. I was a complete tool to the Mulligans. I hope they accept my apology. Tensions are high. We're here for a greater good. And your sexy hat, mostly the hat. Love the duck hat lined with foil inside. Wait, a duck hat? This is so obviously a Donkey Kong hat. I got this in an unboxing a while ago, and it's hopefully going to give us some good luck. We're looking for AMC to go green today. We've moved on from, I guess, charting manipulation to just pure hat manipulation. Lined with tinfoil to protect myself. All right, GME at 173, up 2.5% on the day, and then AMC is at 34.66, and it's down 0.83, but it is trending nicely. I think that this bad Mama Jamma can go green on the day. Bad Mama Jamma. I have a big wrinkly brain idea. How about combining the Donkey Kong hat with the tinfoil hat? Place the tinfoil on top of the Donkey Kong. We'll have to try it out. Matt, I begged you to get help. What kind of help? Mad Dog. We need all sorts here. Catmores. Hey, we're gonna go green. Honestly, I don't know. I mean, it's so, there's no point in even saying it didn't. Obviously, just these like internet troll dickheads, like they bring it down, they just take the fun out of it. Like I genuinely have a bunch of fun messing around with all of you all day, making trades, making money, cracking jokes. I mean, think of the day of Pirates, Buff 24/7, the first Greg. It, like, at some point, especially over the last week or two, namely the last week, it went from just like a good old jolly like mess around time to people like getting way too tense. Like, remember, this is a Wendy's, folks. Like, that's all this is. This is a casino in a Wendy's. You can pound a junior bacon cheeseburger, play the slots, do whatever you want. Like, it's all up to you. Like, life is short. Don't take it too seriously. Have a bit of fun. The Mormons. We're just here to have some fun. Poke a little bit of fun at the system. Out of nowhere, people got too tense. The hedgies infiltrated us. Late to the stream, just looked at you legit, LOL. That's what we're here for. Donkey Kohrs. Willy Wonka, pure manipulation. All right, well, we broke, but we didn't hold yet. AMC trying to go green. Trying to. Blue Origin flight tomorrow. SPCE flight impacted. Not really. That was more of the Virgin Galactic when they flew it themselves. I don't think there's going to be an unduly effect on SPCE with the Blue Origin. I mean, I believe Bezos is going up, isn't he? All right, let's go green. Let's go green. Green. Let's go. Let's get some excitement. Does it mean specifically anything? No, it's a Monday. But I think after everything that's going on, we could have something just to get a little excited about, have a bit of fun. These people are so tense. I just don't know at what point someone made the rule that you have to be like a really tense trader. Break 35. All right, let's go this. Let's do this. Cap Boys. I love that name. I'm loyal to you and Dre until Bo Burnham starts talking stocks. You know, honestly, I agree with you. I saw Bert Kreischer this weekend. He was pretty funny. I think it was his first stand-up in like 16 months. It was funny though. He's a funny dude. Bert Kreischer. He brought his daughters out on stage and they were just so, like, you could tell they were not prepared for it at all. It like made them feel very, very awkward. Matt, when you say take a physical challenge, are you suggesting Philly's own Mark Summer needs to double dare collab with you? I mean, sure, why not? I just want to see what happens. I feel we push our minds in here day in, day out. We got to start pushing our bodies. What's the point of us being multi-gazillionaires without a Ferrari of a body behind it? It's okay to drive a Corolla as your actual car, but you want a Ferrari of a body. Like, we're already working on getting, like, what? Here's the triple threat. Brains made out of crayon, driving a Corolla with a Ferrari body. That's the mantra of what we want. Ferrari bodies, physical, literal Corollas, and brains made out of crayon. I'm having trouble understanding. They seem to work different. Hey, Matt, I love all your content. Can you please buying and selling covered options work in Webull? So a covered call option means you already own the underlying stock, and a covered put means you have enough capital in case they all get exercised. So a call means you already have the shares. A put means you have the free capital. Look at that. Ding, ding, ding. Winner, winner. Chicken, Yahtzee, dinner. Bingo. We're green. Bingo was his name-o. AMC is green, 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 green. Green, 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 green. Shout out to anyone who bought today, calls, shares. You're up. You're up. You're up. Nice and big, too. Let's run. That's working. Can you watch my video of you above? Sort of volume on it. Am I gonna dox myself? All right, where are we going? $2.50 off by 15 cents. All right, we're going. We're cruising now. We're on the green train, the green rocket. We're moving. We're fighting off for money. Remember, there's no options expiring today. There's no crazy stuff like that happening. This is more, it's a psychology thing. It's a win. It's a little win that we want to roll into a bigger win, that we want to roll into a bigger win. It's all about momentum. Momentum, momentum, momentum. And we're just trying to develop some. Let's do this. Hey, Matt, love what happened. Love the hat. What happened to the GoFundMe? It was shut down. And the Ape Fest was postponed until after the squeeze. So Ape Fest, if you paid anything for that, you will be getting a refund. It's going to be postponed. They will start, like, I guess, defining the event and getting it all set up after the squeeze. So it'll means that'll happen like kind of way after it, because those type of things takes a while. And in terms of the GoFundMe, people didn't want Chad to be the face of the movement, and then some other people didn't want there to be a lawsuit at all. So because of those two reasons, Chad took it down, and he's refunding everyone. Just so you guys are, if you gave money to either of those things, you will be getting a refund. Can you shout out my daughter Reed? It's her B-day and she watches Dumb Money with me every day. That's awesome. Much love, brother JP Stone. And shout out to your daughter, the space ape in training, Reed. Dave Portnoy winning on his live. Oh, do you mean whining on his live about getting margin called? Yeah. So just so you know, there's a margin call, and I'll do this in the update video. When there's a margin call, it's not for a stock, it's for your account. It's a relationship between you and your brokerage account of like, if you're presenting too much risk, they're going to say, hey, cut some positions or give us some money. That's what a margin call is. So because of the volatility in the market, they increased margin requirements, i.e. kind of lessen their leeway. Instead of having to have 50% of a position to have the whole position, you might have to have 100 or something like that. Or maybe you have to have enough cash in your account for 200, something like that. So when the volatility in the market picked up, they increased the margin requirements. So it increased the likelihood of margin calls, but it's not specific to a stock. It's specific to your account and your relationship with your broker. What else do we have? What kind of questions do we have? But we're looking good. New intraday high. Looks like we're having a bit of a George W, a bit of a, what was the name of this? Of a parabolic arc. A parabolic arc. Oh, brother. Hit that like. Thanks, Matt. You're welcome. Thank you, Mark, for that support. Long on Tulips, long on Matt, long on Rico. Rico, where you at? I miss Rico Dot so much. Dakota, RIP Dakota. Never forget the name. Work. Then I have to get up, go to my work, and I lose it. Oh. Is happy hour at local Applebee's between 10 and 2? Love the hat. Thanks for the afternoon comeback session. Great info. Much more fun. I kind of like it. And hey, folks, this is a test drive for the week, but I kind of like this concept of me doing a morning stream to get everyone ready. In the afternoon, I study up, figure out what's going on, and then kind of get prepared to present a session to all of you of what's going on and what you need to know. It just allows me some time to, like, I don't know, eat some lunch and actually do research, something that has only happened after market hours for the past like half year. So it'd be nice to be able to research stuff in real time, like we did with this parabolic arc pattern, like we did with the payment for order flow, like we did with the margin call. Like with that, it gave me time to call brokers and be like, what's going on? And they're like, oh, we did margin calls at 2. Some of them did them at noon. Some of them did them at 1. Some of them did it at 3. It's just, with it, it's just nice to be able to get like that information and think of the best way to formulate it in real time rather than like the next day. And it's just a test run. I mean, there's not really this new age of financial commentary live throughout the day. It's not like an established field, folks. Like, I'm not playing with a playbook. Like, the guy who's writing the playbook is wearing a Donkey Kong hat on his head. Like, it's not, this thing isn't necessarily like the most professional business out there. But it's just a test run. My point is like there's going to be trial and error, and I felt like this was a good week to try it because, like, hey, what? It's not like things could get worse. The famous last words. The famous last words. Today was the first day at work I actually did something thanks to your little break. Working was lame and stupid. Matt, when you are happy, we are happy. When you are sad or mad, we follow. Please stay happy. Lots of people count on you. I actually understand that responsibility, and it's tough. I feel like I had a good multi-month run before I was like, hey, I just came to a realization myself that you need a bit of a break. So, I mean, hey, that's a good answer though for the rest of humanity. Like, how long can you run a Truman Show on your life before like it catches up to you? And at least for me, at whatever level of mental fortitude I have, the answer is 6 months. It turns out you can turn your life into a Truman Show for about 6 months, and then it finally gets you. And honestly, if vibes were high, I think it could have lasted longer. It just happens to be that the toxic corners of the internet became a little bit too toxic. But hey, the more you know. Let's say AMC and Jamie merge. In your opinion, how do you think things would work out for both of those stocks? It's super, super dependent on what they would merge. Like, what's the new business plan? Just to say you're merging doesn't really help you out that much. It's like, what would the new business look like? What are the projected revenues? Just simply saying AMC and Jamie merging, I mean, it might be fun at first, but at a certain point, you have to like look into the actual deal. My body's a slug bug. Matt, what do you think of AMC for the week? Oh, brother. Hairy Palms 24/7. What? Hairy Palms? I mean, just looking at the technical setup, I like it for the week. I don't know how crazy the overall market's going to get this week. That's something that's worthwhile to consider for sure. Definitely consider the overall market, but that's why we're going to talk about it, especially in the wrap-up videos. I like to give you like a quick sneak peek at the overall market because it is good to know, because it's good to know what's going on with this margin call thing. I mean, I don't think it's that crazy that margin calls started at 2 or allegedly started at 2, and look what happened at 2. We broke out of this downward trend, and ever since 2, we've been running upwards. Of course, it could be a coincidence. I don't know. But it's also odd timing that at 2 p.m., even when the SPY was flat, even when IWM was trending downward, you know what reversed course and started ripping upward? AMC and GME. Could be a coincidence. I should have on my tinfoil hat for that, because I don't have the evidence that like, oh, they got margin called, they got margin called, they got margin called. I don't have that evidence. But it is worthwhile to point out, starting at 2, the stock went up and it broke its correlation with IWM and the S&P 500. So just throwing that out there. Just throwing out some facts of the price action for all you linear time Gregorian calendar fanatics. Someone said GME flatlined. I mean, this was 2. It went from 170 to 176 and it's at 172. I mean, a $6 run, that's decent. My point is the S&P 500 flatline and IWM went down, and both AMC and GME went against that trend. Sorry, I forgot what happened to the GoFundMe. The creator of it decided to shut it down. I mean, I'm sure he had various reasons, but the end result is the GoFundMe for the lawyer is shut down. And if you did donate to it, you will be getting a refund, is what I'm being told. Margarine call? I prefer butter. Matt, everything I'm reading about the ARC 62% retracement and bounce, it may test but not break the peak again, then typically drop. True. I don't know if there's such word as a typical, because this parabolic thing, it even says that it's are very rare. So when something is defined as very rare, I don't know if I'm going to hop on board and say that there's like a typical follow through on it when it's very rare, because very rare means we don't have that many data points. We don't have that many like samples of it happening. So like, how could we really come across with a, like a common fallout from it or a common reaction to it when the person who wrote it themselves said it's very rare. Since we're allowed to talk about something else besides AMC and Jamie again, say strong brother, what are your thoughts on crypto having its way with me? How is crypto doing these days? Let me pull this up really quick. All right, we have these guys. Let's bring this down. Bitcoin, 31,000, Doge, 17 cents, Ethereum, 1,800, Cardano, $1.12. Oh, brother. Oh, brother, oh, brother. Ethereum, I'm in Ethereum, not looking the best. Doge, I'm in Doge, not looking the best. Same with Bitcoin. Same with Cardano. Just like this is the most I've looked at them in a bit, but my sneak peek at all of these right now is it looks like they're going to still take a little bit more of a breather, but my long-term outlook is still pretty bullish on these guys. So for me, it's like a 10 plus year hold. So for example, Bitcoin trading at 31,000. I mean, a decade from now, I'm either going to be super right or super wrong. That's how it's going to go. Either Bitcoin's going to be non-existent or I'm going to be worth a lot of money off of Bitcoin. Like that's how it's going to go. I'm not in it to the minutia of trading it like this day, this week, this month. When it gets severely hit, I try to buy more. And for me, I want to hold it for, like I said, a decade plus. It's a little bit of a different, I guess, trading plan, a different trading thesis than like say AMC, GME, SPY. Like whenever you're in it, you have to know your trading plan. And my trading plan for crypto is a Hail Mary play for a decade down the road. That's how I'm playing crypto. Counselor Murray, I'm loading up on XRP and VeChain. Awesome. I hope you're still rocking your Ethereum. I know you're staking it. Hey, Matt, we all know you're an insider, so we demand a precise date on the Omega Duck Lord will start the squeeze. Why do we get up, then run back down every time? Just active trading, buying and selling. I mean, remember, it's just a lot of other retail traders, banks, institutions, algorithms, high frequency traders. There's a lot of people trying to buy and sell, and this is the equilibrium we've found ourselves at. Whether it's a legitimate equilibrium, as in, like, okay, there's not like crazy stuff going on in the last minute or 5 minutes, or whether it's completely manipulated, whether legal or illegal, this is the equilibrium we've currently found. People asking for a quick Vortex check. AMC, a net return of 2.17 million. Remember, theoretically, mathematically, stock market plumbing wise, this could be from 2 days ago. Whenever you're talking about 2 days ago, understand that this is the only little block that talks about it. And also understand this is not exchange reported. This is not hedge fund reported. I see a lot every morning I tweet out AMC and someone's like, you can't trust it if it's reported from hedge funds. And I look at it and I just think, you poor little duckling. If only you listened to Matt. None of these numbers come from hedge funds. None of these numbers come from exchanges. They're all like, this is being reported by prime brokers. So if you see a little duckling out there saying, hey, like we can't trust something that comes from hedge funds, it's like, correct them. Say, we can't trust something that comes from prime brokers. It's kind of like that Homer Simpson thing when he's talking to Bart and he's like it's the worst day of your life so far. It's kind of one of those things. Like if you're going to be angry about it, well, at least get it right. Be like, if you're going to throw the conspiratorial flag up in the air of like, we can't trust anyone, well, at least get it right of who you can't trust. Be like, I mean, for them, when we're talking about Vortex and they're like, we can't trust hedge funds, like, okay, well, that's fair to say, but it has the same relevance of me saying you can't trust any bird because, like, I feel like the government's made them all. Definitely pigeons for sure. So it's like the same relevance. Is the last 10 minutes of the chart forming a cup and handle? The last 10 minutes. I mean, depends if it runs up and forms the cup and then the handle. This is more of just like a sell-off, and it bounced perfectly off of resistance, which has now become support. This line we have, look at support, support. I mean, this was drawn for a while, and it's perfectly bouncing off of it. Look at resistance, resistance, support, support. So to all the people who say you shouldn't watch the line, well, what are you talking about? It tells you when a good buying opportunity is. Resistance, resistance, resistance. We had a shoulder, a head, a shoulder. It sold off. It fought back. Support. And then look at that. Support. So for anyone who tells you you shouldn't be watching the line, well, I would respond, that's how you get really good entries. Really good entries. You could have had an order sitting there at 34.23, and for that particular buy, you'd have only been down by 3 cents at its worst if you just had a sitting buy order. So this nonsense of people saying, oh, don't watch the line. My response is, you're not a real trader, because no real trader has ever said that. It's crazy. It's actually insane. But you gotta trust me, man. Just the old shrug, the old just, hey man, you gotta trust me. You just gotta. Hey man, you know me, you gotta trust me. The wink wink, the nudge nudge. I know what I'm talking about. Someone just asked, what does the negative short interest imply? This is just today's change. So the short interest for right now relative to how it updated this morning, it dropped by 2%. So it went from like 14 point whatever to 14.5. So relative to its morning update, it dropped by 2%. I mean, I guess it's just how it changed intraday. So from how it started to this morning until right now, it dropped 2%. But it's 2% relative to itself. That doesn't mean it dropped from 16%. It was starting at whatever, 14 point whatever. And 2% of that number, that's what it dropped by. It doesn't mean that it dropped 2% relative to like just the nominal value of 100%. That's not how you would look at a percentage change. Someone just said, is my internet lagging or Matt's? Honestly, could be both. I have no idea. It was a weird day. Could be me. Oh, you know what we haven't done in forever? And this is like the first time we can do it in like months? Folks, we could try to stop at 6,969 likes. We have the power to do it. There's enough people in here. And if you're new to this, like you have to be a bit of an OG. The last time we did this, it was possible. Like we were just smaller. And so if this is surprising, you're like, did that kid in the Donkey Kong hack just say we should try to get 6,969 likes? Yeah, I did it. It's a rush. So if you did it, the way to do this, we get one shot and one shot only. All right. My suggestion is stop at 6,500. If we see 6,500, everyone should just stop. I know that's weird. There's not many people saying stop hitting the like button, but like I'm telling you, the only way to do it is like legitimately, you just got to stop. You're at it now. There's a delay, so it's really difficult between what I'm saying and when you're hearing it. It's really, really delayed. So we just got to like everyone just stop hitting it. No. You're going way too much. Stop hitting the like button. Okay, you just blew by it. All right. Nope. Well, all right, we're rusty. It's been a while. We can try again tomorrow. It was fun, but like, all right, we'll try again tomorrow. We're rusty. I get it. We have to knock the cobwebs off. We used to be pretty good at it. We did it a couple times, and the euphoria from it was amazing. But we'll try it again tomorrow. We just too far. Too late. All right. Don't tell me what to do. I was just trying to give some advice because it's tough when you have a lot of people and there's a delay. It's a challenge. It's a fun challenge. And to all the like older watchers, we had some good times when trying to do it. We had potential and we still have potential. We'll do it again tomorrow. We'll give it the old whirl. Fun times. Brings back good memories. This is what we should be doing. Day in and day out, we should be laughing. We should be learning. We should be talking about high fashion. You were about to say, I'm so disappointed. I just know the group has a lot of potential. A lot of potential. So, don't tell me what to do. Long time watcher, love your content, but please ask Mega Duck Lord for the squeeze. Mega Duck Lord. Good times, good times, good times. So close. It got amped up real quickly. We were at like 5.8 and we just need to do a hard stop. Like once we hit 6,500, everyone just needs to agree to stop, like completely stop. That's the way to do it. We all have to get on the same page. So I expect everyone to go home, practice, maybe on some other channels, practice liking, practice unliking. It's just all practice. Practice, like you're going to perform as hard as you practice, you know? So if we all just practice a lot, I think we're going to be good. I think we'll be good. All right, we have less than a minute. So for any of those out there who are trying to make, if you're battling with pattern day trading and if you're trying to make a trade, just know you have less than a minute. As of now, AMC trading at 34.63. I mean, it is cents away, 30 cents away from going green on the day. We're down just under 1%. Come on, let's make a little push right at the end here. GME up 2.5%. It's at 173. SPY coming back. IWM coming back. People are buying into close. Ding, ding, ding. The casino is closed. The casino is closed. The casino is closed. Not really, just like one small part of the casino is closed. AMC is showing 34.62 and GME is showing 173.21, at least according to Webull here. So here is the dealio. First of all, thank you. Seriously, I mean, it was a rough week. It was a rough weekend. The fact that I'm seeing this amazing support from 17,000 people. I don't think I could probably articulate how much like it actually means to me. I just want to go back to what we used to do. I want to go back to laughing. I want to go back to talking about everything. We talk about AMC and GME. I want to talk about options, futures. I want to talk about it all because that's what we're here to do. We're here to learn about the market. I am not stopping talking about AMC and GME. Let me reiterate that. I am not stopping talking about AMC and GME. I want to add other things on. I want to go back to just the jokes we made. People are just being assholes. People are being like way too serious. They're trying to rip the community apart. The amount of, you know what, there's no point in even talking about it. Let's just go back to how it was. Let's go back to having some fun times, learning about the market. I don't know, making some stupid Tesla trades. Who knows? The world is our oyster, folks. But overall, seriously, thank you for the support. We're gonna be rocking it tomorrow. Remember, tomorrow it's gonna be the same schedule as today, 9 to 11, and then 2 to 4. And shout out to all of you in the Discord. What I'm looking to do is like kind of hang out with all of you guys midday so we can talk in that voice room. So I think that'll be fun. We're going to be working on getting some other interviews this week to learn about payment for order flow, to clear up some of the dark pool questions. So we have some fun things planned. Hopefully it's going to be an amazingly green week in everyone's portfolio. But overall, thank you for the amazing continued support. Seriously, from the bottom of my heart. I don't think I would have come back to YouTube today if it wasn't for all of you, if I'm being completely honest. So once again, Thank you, thank you, thank you. The plan is I'm going to post an update video tonight. So the plan is update video tonight. So come back to YouTube for that. And then we'll be streaming this new schedule tomorrow, 9 to 11 and then 2 to 4. But overall, remember, thank you so much. And for me and Chair, as you guys know, best of luck in the markets.